This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Dan O'Brien, K-State grain economist, begins today's show with a grain market update. Dan reviews what the recent balance sheets are showing for crops in the United States. Continuing the show is Kansas Farm Management Association economist Chelsea Plummer and Bob Kohman with information about recent work they did to learn more about machinery investments and cost structures. K-State meteorologist Chip Redmond concludes today's show with a weather update. He says Kansas is still seeing the impacts from the last hot and dry spell, but should be expecting another one in the coming week. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show how we normally do with a grain market update. And as always, we're joined by K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thanks, Shelby.
Starting off our conversation talking about futures.
The volatility that's come into the markets and to some degree the growing expectation that, hey, we've got big crops coming for corn and for soybeans especially have come in and brought crop prices lower. And you see it in D's corn futures now trading at about 485. They had been, as you and I have talked in the past, had gotten up to 540, 550 thereabouts. So they've come lower. And generally, you have the USDA's report that came out last week projected 175.1 bushels per acre, 15.1 billion bushel crop. And I think the market is sort of taking that now as what they're going to trust in until they get further news. Pretty similar for soybeans. We did see soybeans, USDA out of that report projected for beans, I think it was a 4.205 billion bushel crop, down about 95 million, and with yields about 50.1 bushel per acre. So in general there, I think the market has taken a pretty similar attitude, I think. And I'm going to come back to those because the weather conditions, hot, dry weather coming in, as perhaps Chip out of our shop has talked about, or will talk about, could change that some, especially for soybeans. It's a little more vulnerable than corn, but it could also affect the end part of the life cycle for corn too. So soybeans more potentially affected by that. But again, I think as far as the markets go, we're all from Missouri now. You've got to show us, before we change our attitude. But the November beans are priced now at $13.30. We had seen during the summer, of course, $14 to $15 beans. Hard red winter wheat priced at about the September contract, 733, D's 741 next year. Again, we don't know what's planted or anything way out there. They don't know quite what the price is at. They put it at 735. So we just looking at prices that are sort of so right now. And over the last few weeks, they've went sideways to lower, and again until we get something that would change that opinion. So I think overall that if we were to stay static right now from where we're at, futures prices go sideways to lower over the next few months to get us to October. But there's a ways to go before we get there.
Dan, kind of steering our conversation now in a little bit different direction than we normally do and talking about balance sheets. And so the first balance sheet for us to talk about today is wheat.
Yeah, where we stand now after that report and after we've digested it a little bit is to look at what the USDA had projected for yields. It really just took things down just a little bit from 46.1 down to 45.8. There's still uncertainty about the hard red spring wheat crop to the north, as well as spring white wheat. But I guess what's kind of telling isn't so much the U.S. numbers. Again, when we made our adjustments yield-wise, go across the border into Canada, and their numbers right across the border are markedly different. And you got North Dakota farmers wondering how basically across a imaginary line can there be that much yield difference. So anyway, I think that Canadian question will be reconciled here going forward, and it'll affect world supply demand. But anyway, you look at that balance sheet, and the USDA did drop U.S. wheat exports by 25 million bushels from 725 down to 700. And all of that drop came out of hard red winter wheat. So this issue that's sprung up with regard to wheat very likely coming into the United States from Europe at extremely low prices over there, low enough that that's profitable to bring it over here and use it at least for a little ways inland into millers and such. That's come into play, and when you look at exports last year for hard red winter wheat for the marketing year, 224 million bushels. This year, after that drop, now 165. So just a sharp drop. And right now, again, hard red winter wheat in the U.S. is absorbing almost all of that. You did see the stocks to use for hard red, what we grow in Kansas largely, some soft red down southeast, but was 34% last year stocks to use. Now it's just under 42. So it's always nice to stand out and be special, but I'm not sure we want to be special in this way in the wheat market. And you see prices right now, I think, following suit in Kansas. We've dropped towards $7 at a lot of locations, $7 a bushel. Of course, we had been $7.58 plus. So that's something to consider. So these prices are dropping right at precipitously in Kansas for wheat, right at a time when, here we're in August, September's coming up. We'll be seeding wheat in October. And of course, there'll be both moisture and profit prospects to consider. And if the trend towards lower prices doesn't change, then how will Kansas farmers vote with their seeders, whether to put wheat in there or not? I think a lot of it's going to depend on the crop rotation and whether they have moisture or not. But one factor also in play would be the price.
Dan, are we seeing any of those similarities also then with the corn balance sheet?
Yeah, that USDA drop from 177.5 bushels per acre down to 175.1, and production from 15.3 billion bushels down to 15.1. That's significant. That's important. Generally, if we would have rainy, wonderful weather all the way to the end, well, maybe that number goes back up. But if we turn hot and dry and stay there, then there's probably risk for more cutback. And the USDA did raise their projected price, $4.80 up to $4.90. Really, all along, a big issue in the corn market has been this large crop out of Brazil that's bitten into U.S. corn exports and just caused our usage to suffer some. We're still well over 2 billion bushels of ending stocks to use. Latest projection 2.2 billion. That's a lot of corn. Really, we haven't gotten excited much lately until we've got to like 1.5 billion. So we're full 600 or 700 million bushels more than minimum that we need, and stocks to use of 15.3, 15.6, so just pretty high. And point being that right now, unless something changes, corn would probably set up to go sideways slower into harvest, unless on the supply side we get hot weather and that affects things, or low prices start to attract export buyers, and we have heard of that happening somewhat.
And a few more balance sheets then for us to talk about, and the next one being grain sorghum.
Grain sorghum is a big deal in Kansas. It's also a big deal in Texas. Of late, we've had strong basis levels for new crop bids, both in Kansas and in Texas. Talked to a colleague, Mark Welch from Texas A&M, that talks about the outstanding strength here of late with grain sorghum basis down by the Gulf. And we've seen in some areas of Kansas our grain sorghum forward bids for October, November equal to or above corn. Generally, it looks like that China's come back in there. They have a domestic alcohol product that they produce, and their buyers have at least put the orders in to buy that. So you've seen a jump, and that must be what we're looking at. And along with that, we'll see how this crop finishes out. You drive across Kansas, and it's wet out parts of the west, really dry in parts of the central, varied around in the east, and it's an open question where we're going to end up by the time we put this hodgepodge of good and bad conditions together for grain sorghum.
Which Chip, our meteorologist, talks a lot about that, which people can, if they stay on, can hear him talk about the weather and what he's seeing, expecting for the next week. And our last balance sheet to talk about real quick is soybeans and oilseed.
Big issue, I think, to be cognizant of right now for soybeans is that crush year over year has gone up. And that's feeding into some of the renewable diesel, biodiesel move that we're seeing. Our exports have been trending lower. The USDA adjusted lower again this last balance sheet. High U.S. dollar, huge South Brazilian soybean crop, all working against the U.S. in that manner. all that said, still at the time we dropped production about 95 million, we ended up in lowered ending stocks by about 55, down from 300 to 245. Stocks to use down from 7, which is already tight, down to about 5.8. So that's tight. Prices up about 30 cents. So you stand back and you look at the two big players in the U.S., corn and soybeans. Right now, you've got more support in the market on the soybean side just because of the way these numbers are crunching out, as opposed to where we're at for the corn.
As we round out today's show and our conversation about the grain market update, how are you seeing this impact Kansas producers?
I think that if we move to harvest lows for corn or just a moderate market, I think there'll be a lot of questions about where we might go off in the future. The thing and that'll be in October, late September, October, depending where we're at in the state. I think it'd be nice to see what planting conditions are in South America. If they're successful getting their crops in or not, because if they're not, in this big world balance sheet that we're looking at, there'll be more support for corn prices than not. But if they just go great, the crop's going in, then we're in a little bit more of a take what we manage for singles rather than for doubles and triples is a borrowing from baseball to look at protecting ourselves with more reasonable gains as opposed to waiting for something that could happen a lot bigger if South America has a problem.
That was Key State grain economist Dan O'Brien. If you would like to hear more from him, you can go to the AgManager.info website and look into the 2023 Risk and Profit Conference and their online schedule, which is taking place August 21st through the 25th. I will link that in today's show notes, which you can find on agtoday.net. We're cutting to a short break now, but we'll be back with more ahead. You're tuned into Agriculture Today, and we continue our show now discussing machinery investment and how it impacts cost structure on farming operations. And then to talk about it, we have Kansas Farm Management Association economist Chelsea Plummer from Northeast Kansas and Bob Kohman from North Central Kansas. Chelsea, Bob, thanks for joining us today.
Thanks for having us.
Yep, glad to be here.
So first off, research you've worked on, kind of looking into this, and to get to that point, how to use some data to get there.
Yes. So in general, what we decided to do, we wanted to look at machinery in kind of a couple different ways, machinery investment per acre and machinery costs per acre. And so what we did was we wanted to look at 10 years. So we looked at 2013 through 2022, and we really wanted to make sure we just used farms that were in the NRS analysis summary every year. So there's a lot of farms in our analysis summary each year, but farms are of course moving in and out. So we found that across that 10 years, there was 372 Kansas farm management farms that were in the summary every year. And so from there, we used those farms when we started breaking down into the different pieces of data.
And Chelsea, in this breaking down, you broke it down kind of into two sets of quartiles.
Correct. So we looked, the primary quartile we wanted to look at, again, was we were looking at machinery investment, the amounts producers are spending on machinery. So we used the kfma measure for crop machinery investment per crop acre. We found the average for each farm of that measure, and then ranked the farms according to that measure. And so then from there, after we'd ranked them, we broke them into quartiles. So there's 372 total farms. So we had each quartile had 93 farms. So we had the quartile that spent the most, that had the highest crop machinery investment per crop acre, and then those quartiles down to the lowest crop machinery investment. We did go ahead and look at crop machinery costs per acre, which are measured a little differently. They are looking at the fuel, repairs, depreciation, machine hire primarily in that crop machinery costs per crop acre. And so we also did, again, we took the farms, re-ranked them by the crop machinery costs, and then put those into quartiles as well to see if we just saw any kind of a different story.
Obviously a lot of work, something you guys have worked on for the past several months and put some time and effort into this. And so, Bob, what are some things and correlations you've seen through all these?
Well, yeah, it was interesting. We initially started this project looking to see if there was any correlation between crop machinery investment and repair costs per acre. That's a common theme that we get when we're talking to producers out there, people who have high repair costs. They're looking to try to make changes in their operation, and one of the solutions they come up with is trying to replace a piece of equipment that seems like it's in constant need of repair. And so part of that was one of the first things we wanted to look at. And what was interesting was the farms with the highest crop machinery investment cost per acre, in fact, also had the highest repair cost per acre. So not only did it kind of blow holes in that theory, it really kind of went the other way. We're talking nearly double the repair cost per acre on our highest quartile farms versus our lowest. So that was one big thing that we saw from a crop machinery standpoint side of things, investment standpoint. But otherwise, we also wanted to, once we got into it, we were wanting to see how does machinery investment overall have an impact on profitability. And interestingly enough, in our highest quartile farms, they showed to be our overall most profitable farms as well by net farm income. So I'm not going to necessarily say that there's a direct correlation there, but there's definitely something to be said about that because our lowest quartile farms were significantly less on the net farm income side. So does one drive the other? I would say there's a possibility that farms that are more profitable, they're utilizing machinery investment as a tax management strategy. And so there's probably some driver in that as far as net income driving investment. So those were definitely a couple of things that we saw from the investment side. And, it was just kind of interesting to look at some of those things.
I'll add a little bit. So he mentioned the profitability from net farm income. And so that's obviously pulling in everything, crop and livestock. And we also looked even just on looking at gross crop value per acre compared to crop production cost per acre. So then a little more isolating the crop side. But the story was the same, that when you looked at gross crop value, that the ones investing the most in machinery had highest gross crop value per acre. They had the highest crop production cost per acre as well, but that net on average was the highest. So just kind of reinforcing what Bob mentioned there or just isolating that crop side.
Seeing a story you were expecting to see or not quite so much?
I would say mostly expecting to see. I don't know if there was any major surprises. I guess, like I said, when we started, we thought we would see maybe an inverse relationship between investment and repairs, and definitely did not see that from the investment side of things for sure. We don't take into account geography or anything like that in this study. This is just throwing all these farms into one place. So, the gross crop value side, like Chelsea was saying, those farms have higher investment. So there could be some geography related things involved in that. It's just hard to say, but we didn't look at those specific things during this study.
And kind of moving on to the second quartile then of talking about crop machinery costs per acre. What were you seeing there?
Well, I don't think there was any real major revelations on this. A couple of things is the farms that had the lowest crop machinery costs overall were the largest farms in our data set. So maybe they're taking the same amount of cost and spreading that over more acres, things like that, being a little bit more efficient. From an efficiency standpoint, that's probably the biggest thing that we saw with crop machinery costs. Our farms that are spending the least amount on crop machinery costs, which again includes repairs, depreciation, fuel, machine hire, are overall our most efficient farms financially. That means they're getting the most bang for their buck of the amount of dollars they're putting in versus the amount of dollars they're getting back out. So I would say one of the main observations that we saw overall was that low-cost machinery producers tend to be low-cost producers across the board, even when you're including things like fertilizer, seed, herbicide, all that kind of stuff. Very diligent managers. Maybe there's some association with that as well. So that was kind of interesting to see how that all played out too.
And so what are some of the major observations you got from this work?
Well, a couple of things that stick out to me is the discrepancy and the difference between how much people are spending on crop machinery costs from the high quartile to the low quartile. So when you think about what people are spending on fuel, depreciation, repairs, machine hire, our highest quartile, they're spending an average of $156 per acre. And our lowest quartile is spending only $64 an acre. That's a $90 an acre difference. And if you think about our average farm size, and this data set was probably 1,500 acres, you take $90 times 1,500 acres, that becomes a pretty large number. And the investment numbers are very similar. Our highest quartile investment farms are spending nearly $500 per acre on average, and our lowest quartile farms are probably spending maybe half of that. So we're seeing farms that have a large difference in how many dollars are being spent on the investment side as well.
One thing like Bob mentioned, one of the original things we were wanting to look at was that relationship between the machinery investment and repairs. And so one key takeaway, again, he kind of mentioned it already, but that there was not just a huge relationship or inverse relationship between those two like we maybe expected to see. And that when you look at this, we do see with a couple things here, equipment investment, when we looked at those quartiles, that they do seem to kind of have a relationship with net farm income. What comes first there, whether people have the higher net farm income and so then they're investing more machinery and equipment, or the other way, but they do seem to have a relationship with each other. And then with machinery costs, that they are important to that net income, but in general are not the main thing driving that.
And something interesting from your work that I saw was how much it costs farms to make $1.
Well, yeah, that goes back to the efficiency side of things. When we look at our crop machinery costs quartiles, the farms that spent the least amount on crop machinery costs over the 10-year average, it took them 77 cents to make $1. And so that's actually a pretty good number. We'd like to see that 80 cents or below. So they're running very efficiently overall. Our highest quartile, so crop machinery costs, they're spending 83 cents to make $1. So higher cost on machinery, probably a higher cost overall. And so just again, our lowest quartile seems to be some of our most efficient producers from the amount of dollars they're putting in to the amount of dollars that they're getting out.
Labor is obviously a big thing, as also talking about. And so did you see any relationships with that?
Yeah, so we did, at least at the data we looked at, did kind of see some relationships and kind of in the direction you maybe would hope they would be. So with the crop machinery investment, we definitely kind of hear the idea that hopefully if when they're wanting to invest more in equipment, they're hoping to be more efficient and reduce some of that need for labor. And so we did actually see, looking at total labor costs, that the ones that had the lowest investment in machinery had the higher, and then on the inverse, the highest quartile with the highest machinery investment did have the lowest labor costs. And we actually saw something. We saw it there. We did see that a little bit in the crop machinery costs as well. But I think the bigger story there is probably on the crop machinery investment side, that in general, they were spending less on labor with higher machinery investment.
Bob, Chelsea, I appreciate you taking the time to join us today and share some of this information that you've been working on recently.
Yeah, thank you for having us, Shelby.
Yeah, we're glad to be here. Thank you.
That was Kansas Farm Management Association's economist Chelsea Plummer and Bob Kohman. We're cutting to a short break now on Agriculture Today, but we'll be back with more ahead. This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. We end our Friday show as we normally do with a weather update. And as always, we're joined by K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Before we start looking at what we're going to see possibly in the future, first taking a look back and seeing how our past weather is continuing to impact Kansas.
Yeah, as you look around, and a lot of folks know this already, but there's just a lot of impacts that are still remaining from July's heat, where we have corn that definitely didn't fill out and is burned up basically, and I've even seen some combines moving. We've had some drought improvements and some precipitation in the last few weeks, but it's another important sign that weather can be very variable over short periods of time. And a week of high temperatures and high impact weather can have a lasting impact on agriculture especially. And as we think about the economy and the different value of crops, and as they fluctuate and change, that's something to consider. People think that the drought has been mitigated in a lot of areas, but really it's not always just drought. It's just high impact weather that really drives the Kansas economy. So a lot of high impact still remaining. There's still pretty good water storage in places, except for in the Flint Hills area where we still have just managed to miss precipitation. But we've had some cooler weather over the last week that helped mitigate some of those things, where we had temperatures as low as the 40s, the upper 40s in western Kansas. And so it's a sign and a taste of fall, but unfortunately it's going to be rather short-lived.
Kind of looking behind us, we did see some rain, which created some good things for Kansas, for most parts of Kansas.
Yeah, unfortunately the rain came with some severe weather too. So we did see some hail, but yeah, good amounts of rain. The Pawnee County area and the surrounding area saw 3 to 5 inches of rain, and then we also saw some more kind of a corridor from that region to the south and east that saw 2 to 3 inches, and then the southeast obviously got a little bit more, about 4 to 5 inches. And so those areas resulted in drought improvement, and we erased a lot of exceptional drought and even a good chunk of the extreme drought in the state this week. So definitely some positives, but unfortunately for the crops that may have been planted early, precipitation was too late. And so hopefully this is a really well-timed precipitation for the crops that were planted later.
Chip, you mentioned a taste of fall, but we're not going to be getting a taste of fall as we move forward, are we?
Yeah, we're going to get a pretty stark reminder of how still in the summer we're likely to see summer impacts. No, we will see summer impacts. My big concern is that we're entering a period of a strong high pressure developing over the central United States that's going to basically lock into place for at least a week. And this looks very, very similar to the conditions we saw in July. So we're looking at multiple days in a row of 100-degree heat. The one thing July had is that it brought a couple storm systems across the northern part of the state to help cool off at least some part of the state. There's not going to be any rain within 100 miles of Kansas. Over the mountains and up into Canada, way out to the Great Lakes, and then way down in the Gulf. That's where the rain is. We're nowhere near. So we are going to be hot every day. We're not going to get much break at night either with overnight low temperatures. We're going to struggle to get down out of the 90s over the weekend. So really high impact weather that unfortunately could be a bad thing for folks that were looking for some cooler weather to continue.
Chip, you mentioned a week, so do you think this is going to stick around longer than a week or really just be here for about 7 days?
Yeah, we're going to get magnified by the fact that we've got potential for a tropical cyclone in the Gulf, and then we also have the likely Hurricane Hillary in the Baja, California. And what that does is that amplifies that high pressure and basically invigorates the blocking pattern, and so it becomes very challenging to forecast when that pattern is going to break down. And overall, I think we'll see this weather pattern continue for at least the next 7 days, and potentially there is some opportunity for it to last into September even.
And Chip, if people would like to stay up to date on the weather, what's one of your favorite resources to use?
Yeah, you can follow the hot temperatures and track just how warm it got on the Mesonet. That's mesonet.ksu.edu. And that's a great place to look at, see how many days it's been since you had a wedding rain, see just how hot it got.
Chip, I appreciate you taking the time to join us today.
Yep, hopefully we can have some better news next week.
That was Kansas State University meteorologist Chip Redmond with this week's weather update. I will link the Mesonet in today's show notes, which you can find on agtoday.net. That's all we have for you this week on Agriculture Today, but we'll be back with you on Monday.